David Brookes from BDO, thank you very much for speaking at the BPR Masterclass today, and thank you very much to BDO for hosting the event. You walked us through BPR in the context of some of the other estate planning solutions that are out there. How do you see it fitting into the overall estate planning regime?
I think it's certainly a growing part of people's investment portfolio. Originally we used to see lots more trust planning, particularly prior to 2006, but since then, with extra tax on some of the trust arrangements, BPR certainly becoming the key driver and for investment, whether that be directly into BPR products or into EIS products that qualify for BPR as well.
And you very bravely gazed into your crystal ball and talked about the upcoming election and what might happen to the legislation around these topics. Can you just give us a little bit of flavour of that, what your sense is for the legislation around all of these tax efficient investments?
Yeah, so as you say, the election's coming up. We don't know who the new governments are going to be or what their attitude might be. There's certainly pressure on tax avoidance and trying to raise more money from tax avoidance. It's always the government's balancing figure. They'll spend all this money on the NHS and other things, and where will the money come from? Cracking down on tax avoidance is always the balancing number, so we have to be aware of that in the background. But IHT is only about 3.5 billion of tax take, and the BPR element of that is even smaller. And so in my view, what the revenue and the Treasury could do is to clamp down on some of the trades that would qualify, because it's quite broad at the moment, anything that's a trade, as long as it's not making or holding investments. So they could well tighten it in a similar way to the EIS trades, for example. But other than that, I can't see them making drastic changes, because they could have done that a long time ago and they never have.
Makes sense. What sort of work are BDO doing with providers and investors and advisors and anyone else in this particular space?
Well, we do act for a few of the promoters. Some of the original BPR investment products we did quite a number of years ago, and as somebody said, that they've had a number of successful deaths where people have died and inheritance tax BPR has been given. We also act obviously for a lot of high net worth individuals who are conscious of what happens to their wealth and what their tax mitigation strategies might be. So we act for both the promoters and some of the users as well.
And you were talking earlier about the interplay between EIS and BPR, and how you felt that, or you saw a lot of investors in EIS were motivated by the IHT planning aspect. Can you just expand on that a little bit?
Yeah, it's just, it interests me because I always wonder why people go into EIS investments. A lot of them are quite high risk. They're new or young trading companies. You do see quite a few failures. And so I'm always interested in people's motivation. Some are motivated by the upfront income tax relief. Some are motivated by the tax-free exit, the tax-free gain. But an increasing number seem to be motivated by an inheritance tax, which I've found counterintuitive, really. And I think as some of the qualifying trades for EIS have been clamped down on, so things like solar PV no longer qualify for EIS, but they do qualify for BPR, maybe the tide will start to turn now, such that those investors after inheritance tax relief will focus on BPR products.
And does that influence your view of the future and how things will develop in this market? Do you think we're going to see more growth? I mean, we've had an awful lot of growth in this market already. From our research, we saw a number of product launches over the last 2 or 3 years. Almost as many products again have come onto the scene in just the last 5 years. So is that something you see continuing, or do you see it levelling off? Or
I think it will level off, but there are still some in the wings. We've certainly spoken to some who are thinking of bringing out more products, so there are certainly more out there to come, but I think the large growth may well have started to level off now, I think, because you do eventually get to the point where the market gets quite saturated.
And for advisors that are watching this video and watching this interview, what is your sense of the sorts of things they should be looking out for with these schemes? We ask this question of the providers and they give their view, but from the point of view of a tax expert, are there any pitfalls they need to avoid, or any key features they need to look out for?
Liquidity is a big thing that obviously was talked about a lot today. People are concerned how they get the cash back, and I think that should be focused on, and questions should be asked of promoters on what the liquidity situation is. In terms of the trade, it's important that the company is carrying on a genuine trade, and so the closer to the line promoters get with a trade, and whether is it actually a trade or is it investment, and as soon as you're on that cusp of investment or trading, that's where I start to get a bit more nervous. So if I was personally investing, I would go towards the ones that are very definitely carrying on a trade and move as far away from investment as possible. So that's another thing to consider. I think that the actual promoter themselves, do they have a track record? Have they been around for a while? If you have any problems in 3 or 4 years' time, will they still be there to answer those questions? And they're the sorts of things I would look at.
Great, David. Thank you very much for all your contributions today, and hopefully we can speak at another event soon. Thank you.
Okay, thank you.